Good morning and welcome to CIS Live, brought to you by Support the Springs and the Colorado Springs Chamber and EDC. I am Emma Mitchell and I am the Member Relations Manager for the Colorado Springs Chamber and EDC. Today I have with me Robert and David from Thrivent Financial, who will be talking to us about the financial market. Go ahead, David.
All right, thanks, Emma. Thank you for having us today. Robert and I are excited to be asked by the Chamber and EDC to share some of our knowledge around today's volatile markets. Robert and I work as fiduciary financial planners, and we work every day with our clients to provide financial clarity in a world of ever-changing financial complexities. Robert has 5 years in the investment management industry and previously was a lead analyst on a $2.5 billion private equity portfolio. I specialize in protection planning and tax advantage savings strategies, and I'm also an ambassador with the Colorado Springs Chamber. And I certainly recognize the impact that the Chamber and EDC has on business in Colorado Springs. So Emma, to you and your team, first of all, thank you for what you are doing to promote business during this unprecedented and strange time. So to everyone else that's watching this, thank you for supporting this great organization by being here today. We've got about 10 to 15 minutes, so we're going to cover the most recent market data, the timeline on stimulus efforts, and provide perspectives on today's volatile market based on some historical market data. Lastly, we'll provide some action steps based on most common questions we have been seeing, and I believe that we have a couple questions that were sent in that we can answer if there's time. So, first of all, the most and ever important disclosure that I'll go through real quick. This information in the following presentation is educational in nature, does not reflect each individual's circumstances. It's not designed to be interpreted as advice to the individuals viewing this presentation. So with that, Robert, let's jump in.
Yeah, thanks, David, for the introduction. And Emma, thanks for you and your team having us here today. We're really excited to be here. So I'll go quickly through just some high-level market points that really have made an impact in all of our lives over the past few weeks. First one being, right now we're up to over 16 million in jobless claims in the past 3 weeks alone. This was the largest increase in the unemployment rate since January 1975. So a large portion of our communities are now being affected by this pandemic. Some light at the end of the tunnel. We did see a 25% market rally from the March 23rd low that we hit. However, we're not fully out of it yet, so we're still down 18% from the record highs we had back in February. Again, this data is changing on a day-to-day basis, so this was as of last Friday. And again, data is changing day-to-day, so depending on when you're watching this, we may have completely different numbers that should be up there. Some of the biggest sectors that we're seeing that were hit by this, energy, manufacturing, and banking are seeing the worst of it. Really, each individual day, it seems like there's a new stimulus coming out, a new act, a new law that's being passed, changes to the tax code. So really, we thought we'd put together a quick timeline of some of the big key points that we saw. March 3rd, the Fed reduced its funds rate by 0.5%, which is bringing it down close to zero. March 6th, $8.3 billion was allocated to fight the virus. March 12th, Fed added $1.5 trillion in liquidity to banks and seems to continue to do that on a daily basis. March 13th, a state of emergency was declared and virus testing was made free. March 17th, as many of us are familiar with, the tax bills got delayed 90 days. March 27th, the wonderful CARES Act that is still unraveling and still processing. $2 trillion in stimulus was passed. That's the tax credit advance that we're seeing, the $1,200 checks that are going out, and the SBA loans that we're seeing improvements to as well. March 31st, a 90-day tariff suspension was discussed. This was to help our imports and exports. As of right now, it's still being discussed, but nothing has been officially done about it quite yet. And then April 11th, over this past weekend, we saw the first wave of stimulus checks sent out. Those will be continued to be sent out. Many of you may have seen those already. If not, they'll still be rolling those out till closer to September of this year. One thing we wanted to do is put together, there's a lot of interesting data, different things that we're seeing out there, the correction in the stock market that we saw. But we wanted to put in perspective, so we did a little research on what's happened in past health crises when this occurs. So different pandemics, how has the market reacted after that initial drop? So I won't read through all of these numbers here, but effectively on average, 6 months after the pandemic, we had a 10.5% increase to the S&P 500. And if you roll that out 12 months later, the average was 17%. So, on a brighter side, we have seen a 25% rebound so far. So we're definitely above that average. At the same time, I believe the general consensus is we're not out of the thick of it quite yet. With that in mind, we really wanted to provide what are some actionable steps that you can take home and apply to your financial situation and your investments today. One of my favorite quotes I'll share by Warren Buffett: predicting rain doesn't count, building arcs does. Over the past year to 2 years, many people were calling that a correction to the stock market was going to come. It's great, you can predict rain as much as you want, but it really only matters, on the days, did you bring an umbrella when it actually rained? So with that, I'll let David talk a little bit on as we dive into some of these steps that you can take home with you.
Thanks, Robert. I love that. I love that quote. I've got a little different quote. Maybe you've heard this before, but I think it's pretty good advice right now. So the quote goes, "When the tide goes out, it's obvious to see who was skinny dipping." Think about that for a second. Those that haven't had a proper plan in place are more in trouble now than the rest of those that did have a plan. So having that emergency fund in place is very important right now, and we see why. When things are great, when the tide is up, it doesn't really matter. But when it does matter, when that tide goes out, that's when having that plan in place counts. And this is important in both personal and business life. Emergency fund on the personal side, and in business, it's oftentimes called a contingency plan. So it's really important to think, what is your contingency plan? What is your emergency fund and your emergency plan? When income dries up, when the economy isn't doing so well, how are you able to survive? And it's really important. And then we're seeing that become a bigger conversation than we have in the past decade because of the current conditions. And again, can be for both business and personal. And having that emergency fund allows you to keep your long-term plan in mind and in consideration. It's during any time of uncertainty, it's very easy to make poor decisions based on emotion as opposed to fact and logic. And you can deviate pretty clearly from the plan that you had in place if you're not careful. I think, Robert, you have a good example of how keeping this plan in mind as opposed to making a knee-jerk reaction. So why don't you give us that example?
Yeah, absolutely. So Fidelity did some great research in the past decade on what, based on market data, we're talking about making rash decisions. And they found out if you look over any 20-year period of the stock market, if you missed out on the 5 best days, so if you were sitting in cash, you weren't in your investments, over the 5 best days of the stock market over any 20-year period, there's a high probability your positive return could have turned into a negative return. And I'll just say that again. So if you missed out on the 5 best days over a 20-year period, there's a solid chance that your positive return turned into a negative return. Obviously, that's based on general market data and not applicable to everyone's situation, but it just goes back to, not making those emotional decisions when times are scary. This is an emotional time. We're talking about people's money here. At the same time, going back to what was the plan all along? Like, were we expecting this down the road? Or was this part of the plan? And, what are some things maybe we could do to stick with it, but at the same time, long term, maybe we should hold on to what we have today. So, that was a great example and really good research by Fidelity.
Yeah, absolutely. And Robert, you touch on the next point of having professional guidance and seeking out professional guidance. So, why don't you talk a little bit about why it's so important to seek out professional guidance right now?
Yeah, absolutely. So I always joke, I don't change the oil in my car because I know one, it would take me too long. Two, I'd probably mess something up. And three, I know there's people that are much better at it than I am. During this time when we're talking about those emotional decisions, it's important to have a sounding board or someone to talk to, a resource to go to. So I know, David, you're a member of the chamber, but I also know there's many other financial advisors and planners that are members of the chamber and members of the Colorado Springs community. Really, I'd encourage everyone watching, just seek out a person you can trust, that you know, that wants to understand your individual situation, even if it's a family member that's wise in the finance world. Just have those conversations with people. I know many advisors in the Colorado Springs community are willing to sit down, just have those conversations before you make those emotional decisions. I'd say also too, when we were talking about the timeline for the CARES Act, there's so many laws and stimulus that are getting passed on a day-to-day basis. For the CARES Act, for example, now, people that would have been required to take RMDs are no longer required to take RMDs this year. Some people have access to retirement savings if they were impacted by COVID-19. Even with restrictions, of course. But there's so many different things that individuals need to navigate to make the best decisions for themselves and their families. So having a resource that kind of lives and breathes this on a day-to-day basis is really important in a time like this. So
Yeah, pretty easy to misstep and go down the wrong path without a guide.
absolutely. So David, tell us a little bit. I know you've been having some conversations with your clients on really diversification and diversity in their portfolios.
Mm-hmm. Yep, and this is a conversation, Robert, you and I have on a daily basis throughout the year. I mean, not just because of what's been going on, but diversification has come to the forefront, and most people have heard of diversification in terms of asset diversification. So how many stocks versus bonds do you have? What kind of stocks or bonds are they? Are they in large companies? Are they in emerging markets, or maybe international? And that's all about spreading out risk. So you don't want to put all of your eggs in a basket, if you will. There's a couple other types of diversification that, Robert, we talk about. And the one type is time. So time diversification. When do you need it? And all of this really comes down to what's the purpose of the money. But if you had your emergency fund and you said, well, I'm not going to need it for a while, so I'm going to put it into a restricted account, maybe an IRA, something like that, that has some time restrictions around it, that's not accessible. So you know that you need that money, and typically accessibility goes hand in hand with time. So accessibility, if you need it on like tomorrow, let's say, needs to be there. It's a great place to be safe with that money and not lock it in for a longer term time. However, retirement funds, that's a long-term approach. So we know that we can put those in a little bit different type of vehicle that we're saving in. The other type is tax diversification that we talk about. And this is really important because, again, with accessibility, how is that tax and what restrictions are on those? But I think that time restriction right now, the time diversification is really, we're talking a lot about that as we talk about those emergency funds and accessibility to different pieces of savings.
Yeah, very, very good point. I like that you brought up, diversification. We typically think, what's the stock and bond mix, but time and taxes are so key too. One thing I'd add, it's interesting. The other piece to consider in all this is really what's your risk tolerance. So I think if you asked people a year ago when the stock market seemed to be humming and not going anywhere but up, most people were comfortable with taking more risk, adding more risk to their investments. But now that it's gone the other way, it's a really good time to, introspectively look and see, what risk am I really comfortable with seeing? What movement on my account balances when those account statements come out, am I comfortable seeing? So just take this time to be re-looking at really how much risk, you're really willing to take over time. So, with that, really good points on the emergency fund, David. Just keep your long-term plan in mind. Find a professional you can have a conversation with. And then, consider diversification, tax, time, asset, and also just what risk are you able to take. David and I are always happy to have a conversation. So I put our information up on screen. Again, though, there's plenty of other advisors in this group and other groups in this Colorado Springs area that would be really good to have a conversation with at this time. And with that, Emma, I think you mentioned we had a few questions that were submitted for us as well. So we are ready for those if you have them.
Perfect. Thank you, guys. That was really informative. Some questions that I have for you. What is your best advice for somebody who's worried about their 401k or their retirement funds at this point?
Yeah, good question. So I would go back to, it's extremely individualized. One, it's an emotional thing to see those movements on your account. Two, what impact, if you're planning on retiring this year and you had a large movement in those accounts, like there may be some trade-offs you're going to have to be willing to make, or maybe we need to adjust the retirement. It goes back to having that professional conversation surrounding that, because I have dealt with clients in the past that they do need to adjust. Maybe we need to work a part-time job for a couple of years to make it work, but we're willing to do that to be able to leave our full-time job. Or maybe with some other trade-offs, we're still able to retire and live comfortably. We just need to make some important decisions now on how much we're going to live on and how much we're going to budget. So really, really good question though.
Awesome. People who are still working, I know you talked a lot about diversification and investments and things like that, but do you have any additional tips for those who are working right now and are kind of thinking, what should I be doing? Should I be putting more money into savings, into that emergency fund, or investing, or what you would recommend?
Yeah, that's a common topic right now. What we're seeing is surely people on two spectrums, or two sides of the spectrum, if you will. One, I'm going to hold on to it because it's really uncertain. So that's the saver mentality. The other side is now's a great time. Like, let's start getting our plan in place and seeing what we can do to take advantage of this. And there's probably a blend of both right now that should be happening. And again, it's really individual, but we want to make sure that those savings are there. So if this continues on, maybe that person that's working will continue to work. And we hope that's the case. And we hope that everybody that isn't working can get back to it soon, but we don't know. So making sure that you have that savings in place. And if you are able to put more into a retirement fund, let's say, or put it into the market, now could be a good time. It really just depends on having those individual conversations with people to see what really works into their plan.
Absolutely. And the only thing I'd add too is the conversations I've had with folks on that is, yes, it's probably a great time to be adding, money to the market if you have that emergency fund or job stability. At the same time, you got to think what's the long-term use of that money, and then what's your long-term plan to continue to invest and create a plan for yourself so that down the road that money can be put to good use for yourself and your family.
Perfect. I have another question I thought of while you were presenting. Do you have resources or places maybe on the Thrivent website that you could direct somebody towards just about budgeting and creating a budgeting template or something like that before they even come speak to you and get that guidance?
Absolutely. So we do have, so if you go to, Thrivent.com is a great resource for a lot of that. What I encourage people to do though, specifically around budgeting, is find what works for you and what you're actually going to use, because it doesn't matter how great the tool is. If you don't use it, it doesn't help anything. So some people are better off using a piece of paper and writing things down because they're actually going to do it. And some people love the technology and the budgeting tools and they'll use that. So it's really, there's hundreds of budgeting tools out there. So find the one that works for you and then two that you're actually going to use.
Budget doesn't do anything if you don't track you can write it down, but if you don't track. Doesn't really do much.
Yeah, I found that for myself. I tried to use Mint. I tried to use You Need a Budget. Couldn't figure out how to use that one at all. So I just have like a piece of paper and a Google spreadsheet, and that has been just working fine for me. But
Great.
yeah. Okay, last question. Are there some positive stories that you could share during this time of unstableness?
Yeah, absolutely. Robert, I'll take this one to start because I'm pretty excited about this one. I was working with a couple last week, and I asked the question because I wanted to know how this was different than last year, because we weren't working together a year ago. And if I asked if this happened last year, and we weren't having these conversations, you weren't having these conversations amongst yourself, how would things have been different? And the answer was very honest and very very real, which was really amazing. And the answer was things wouldn't have been good. We wouldn't have been talking to each other. And honestly, I would have probably been drinking a lot more and swearing at home, and the home life would not have been good, because the stress levels were so high. But now, because, as was said, we're able to have these conversations, we know how to talk about this with each other, and we've made the plan for this, so we're not as stressed, that we can get through this. And for me, that was a validation of everything that we talk about. Why do we talk about this? And it gives me goosebumps when I think about it, because that's exactly what we want, and that's what we're in this for.
Absolutely. And I'd say a positive note on the outside is just watching, even specifically the Colorado Springs community, how everyone seemed to have band together. I mean, I know the Chamber and EDC, the programs that you're putting out for a resource for business owners, for individuals, for people that have lost their jobs, like even some of the stuff that we talked about today, the resources you all are putting out there and connecting with people, just so everyone can make the best of it and kind of band together. And we'll make it out of this. It's just we all need to do it together, to get there. So it's been really neat to see the overall reaction, in this community. It's been exciting.
Yeah, and I think to piggyback on that question of those that are still working, what can we do? Those that still have stability in their income, if you can, support the businesses that are open that aren't open in the same way that they used to be. Support those businesses and those people as well that aren't working. What can you do for your neighbor? Because there are so many ways that we can be generous, and there's so many ways out there. You're featuring so many on things like this and the other things that the Chamber's doing, that we support each other. So those people that are working, if we can just ramp that up just a little bit and help others at this time, it's going to make us all stronger on the back end.
I agree. Thank you, David, for saying that. Well, that's all of my questions. I so appreciate both of you for being on here today. And I'm going to encourage people to ask their questions on the video posting, and David and Robert, maybe you can monitor that for the next couple of days and answer those questions for people. And of course, we have your contact information too. So
yeah, that sounds
awesome.
Great.
Okay.
Thank you very much for having us.
Yeah, of course. Thank you guys, and thanks for everything you're doing and your support of the community too.